Hey traders, I want to show you some live trades I took today, closing out and rolling a few positions. And I also received a few more questions about rolling, so I will address them as well. I pretty much trade 100% in the mobile app of my broker, TD Ameritrade's mobile app Thinkorswim. I like the mobile app because it's just so much more convenient and easier to navigate. Even when I'm at home sitting next to my computer, I still trade on the mobile app. I know the mobile app so well, and it's just easier for me to execute the trades. So I decided to record my screen earlier today when I was making these trades so you could see exactly how I use the mobile app. So the screen that's up now is the positions screen in the mobile app. You can see I had on about 10 positions earlier today. And some of these I needed to close out or roll into the next week because they were in the money. They were below my strike price. You also may be wondering what the message is up top where it says call alert, immediate action required. As I mentioned in an earlier video, sometimes I get early assigned stock and I don't have the cash in my account to cover the purchase of that stock. So my broker will notify me and they give me, I think it's 5 to 7 days to resolve it, either by depositing more money or I would need to sell the stock or close out some other positions to free up that cash. And that's the alert that I will see in my account when that occurs. And if you click on the right arrow, if I would have clicked on that, it would show you the amount that I would need to deposit or the amount of cash I needed to free up. I think it was around $200 that I needed to free up. So I did that earlier in the day, but the message doesn't go away until the next day. So even though I'd already cleared that up at the time of this video, the message still shows, and tomorrow it should be gone from my account. So that's just an FYI of what that is. So I'll play the video, and you can see I go down and I open up my PayPal trade. So by clicking on the left arrow next to my PayPal position, it would show me any options that I have for that. In this case, I have just the one where I had sold 11 contracts for the May 18th expiration at the 81 strike. Now this is a trade I've been rolling for a long time. If we go back and look at my trade history, this trade started back on March the 14th. So I've been rolling it ever since, waiting for it to finally come back up above my strike. And today, it finally did. It finally broke above 81. And so I was looking to close it out and get out of the trade. So to close this out, I would just click on the checkbox next to this option, and it will bring up the order entry screen for me to close it out. So okay, I click on the close, and you can see it shows me, again, it's 11 contracts. It shows me the expiration week. It shows me my strike price of 81. You can see now the stock is at 81.41, so it's back above my strike. The option is currently trading for an ask of 22. So since I'm buying this back, that's how much it would cost me to buy back, would be 22 cents if I were to buy it at the ask. Now I could wait to close this out because I know since my strike is now out of the money, this option will eventually go to zero because this is the last trading day. But I didn't want to risk waiting till later in the day and somehow PayPal drop back below 81, which I think is what actually happened later in the day. So I decided I was willing to go ahead and give back 20 cents to get out of this because I've already collected a lot more than that from all the rolls and everything that I've done the past several weeks. So I decided to go ahead and close it out. Also, another thing I want to show is it shows the trade price of 6.78 and a total profit since the opening of $7,000. That's a little misleading because this is from a recent roll, and that roll does not reflect what my initial trade price was from back in early March. And so what I mean by that is if we go look at my trade history again, you can see the last roll I did was back on, let's see, it was back on April the 20th, no, sorry, it was back on May 4th. I closed out the May 4th week and rolled it to May 18th. So I actually rolled it 2 weeks. Normally I would roll a week at a time, but I'm guessing when I went to roll it for that week, the credit probably was not very good, or it may not have been a credit at all. So I went ahead and rolled it out 2 weeks, so that way I could still receive a 4-cent credit for that roll. Because when I roll, I don't ever want to have to pay to roll. I want to still get paid at least something to do the roll. And you can see that that new option was selling for $6.85. So that's what this is reflecting, is what that option was trading for at the time I did the roll. So I didn't receive that as my credit. I did not receive a $6.78 credit to give me a profit of $7,000, because it cost me $6.81 to buy it back, and then I'm selling it for $6.85 to roll it to the next week. So I'm only really getting 4 cents out of that. So I just wanted to make that clarification, that you can't really go by what this trade price shows, because that's from a roll. It's not my the initial trade that I did earlier where I received a 87-cent credit. That was the initial trade. Also, the reason why this shows 678 versus, what was it here, 685, is because I had 11 contracts, but I only did 8 then, and then later on I did the other 3. And you can see I got in for a little better price here. I got in at 660, so that's why, actually no, sorry, a worse price. So that's why the average changed. It was because this one was 685, this one was 660, and so the average between those two was around, my fill was around 678. So that's why you see the difference there. So I hope that makes sense of why these numbers are a little off. So if we continue playing, you notice toward the bottom of the screen it says close position. So that's what I end up clicking on to take me to the next screen. And this is the actual order screen. So you can see I'm going to buy this back. It defaults to 23 cents, which is what the current ask is. And it will cost me $261 to buy it back. But you can see I'll go in here and adjust the price, because I don't want to pay full price. I want to try to get a better deal. So I lowered it down to 20 cents. And I have to confirm the order. And you can say, okay, now the order's been sent. And the order will just sit there in my working order tab until it gets filled. Because since I lower the price a little bit, I have to wait till somebody's willing to agree to sell this to me for 20 cents. So the order will just sit there and wait until someone agrees to pay me that. So while that's working, I go back to my position screen, and now I'll go look at another trade that I needed to take care of. This one is Etsy. Now Etsy had earnings, it was either earlier this week or last week, but this was a pure earnings play. And this is a trade that I never had to roll. And so this profit you're seeing here is the true profit. I made $1,000 on this trade, because when I put this trade on, I received $1.25. If we go back and look at Etsy, yeah, you can see that on the 8th, May 8th, so that was last week, I received $1.25 credit, and then I bought it back today for 25. So if we play this one out, and this is when I decided to, again, to close out, because I didn't want to roll it, and you'll see here in a second why I decided to close it out versus roll. So again, here's what the close screen, the current ask is 30 cents, but I adjusted it down to 25 cents because that's, you know, I want to, again, you always want to try to negotiate the price. You don't want to just pay full price when you're closing out your positions. I think I end up canceling this so that I can show you what a roll would have looked like. So yeah, I go back, I cancel it, and then I go back in again. And you can see when you scroll down, instead of close position, there's another option there to create rolling order. So this is actually how I would have rolled this if that's what I was wanting to do. Okay, so you can see when it's doing a roll, it's basically closing out my current week. It's closing out the May 18th week, and it's rolling me into the next expiration. Now, Etsy does not have weekly options. They only have monthlies. So the very next expiration I could choose from was only out to June 15th. But you can see if I decided to do this roll, it would pay me $935 to do it, which is great money. But the reason why I didn't do this is because, one, I don't like having to hold something for another month. I don't like doing monthly options. I only did this, again, for an earnings play and expecting to get out of this trade regardless and not bother rolling it. I mean, I would have rolled this if I would have been down a good bit. If Etsy had dropped, a couple points down, then I would have just rolled it because I would not have wanted to take a huge loss. But since Etsy is pretty close to my strike price and I can get out, and I could get out of this for 25 cents, that's what I decided to do. But this just goes to show you, if I did decide to roll, I would get $935, and I would have to hold on to this to June 15th to keep all that money. But I decided to just go back and close it out. So I cancel this. And then I go back to the trade again. And this time I select close position. And this is when I actually decide to close it out. And I lower the price to 25 cents. I hit confirm send. And you can see now I have two pending orders. I still have my PayPal order that hasn't filled yet, and then my new order of Etsy. I think now I'll go back into the PayPal order because I want to maybe lower it. So here, if you click on your working orders, it allows you to cancel the order or cancel replace order. So I click cancel replace, and this brings back up my order screen. I do this a lot if I don't get filled within a few minutes. I don't, I get impatient and don't want my order to just be sitting there for a long period of time. So what I may do is come back in again and lower or increase the price. So initially I was trying to buy this back for 20 cents. So I would come in and increase this to, say, 21 cents if I wanted to try to go ahead and get out. But when I went to go do it, you'll notice up top, it shows me the current bid and ask. And these numbers update real time. So if I hit play, see, that ask changed to 21 cents. So it changed my mind to change the price because I'm thinking somebody's going to, let me go back, sorry. So in my mind, I'm thinking I'm going to leave it at 20 cents because the ask is getting so close to that price. I'm expecting it to fill pretty quickly. But if the ask would have been higher, I may have gone in and adjusted this to make it a little higher to try to go ahead and get filled on this trade. So I ended up deciding to just cancel that order and not try to make a change. And I think so you can see it just disappeared off the screen. That's because it filled. So it basically filled just a few seconds after I decided to not do it. And then if we go over to the fill tab, it'll show that my order was executed and I got filled at the 20 cents that I was trying to get. So my Etsy order is still working. I go back to my main screen, my main position screen. You can see next to Etsy, it has that little folded paper indicator. That just means that I have a working order in process. You'll notice here in a second that will disappear, and that lets me know that my order had been filled. And also my phone will make a little ding sound to let me know that it's been filled as well. So while that's working, I'm looking at some of my other positions. I'm looking at, see, okay, you can notice that icon disappeared next to Etsy because that means the order's been filled, and my profit loss since open goes to 0 because now I don't have a position anymore on it. I was looking at my first solar trade here. So yeah, I go back and look at the fill tab. Etsy's now been filled at 25 cents. I go back to First Solar and I open it up. So First Solar is a trade that I put on, I believe it was earlier in the week. And it's really close to my strike price. My strike price is at 72. The stock is trading at 71.64. I received a credit of 96 cents, and I could buy it back now for roughly 66 cents. So it would be a $200 profit in just a couple days. But I decided to wait because I was hoping that First Solar would actually go back up above my strike later in the day to where I could actually close this out for a lot cheaper. So I held off on doing it, but I think I go through the process of showing you how I would roll it if I decided to roll it, which is what I ended up having to do because First Solar did not go above my strike, so I did end up rolling this. So one thing I want to show here is that, okay, if I roll this the next week, I'm going to get paid another $724 if I roll this out 1 week and keep the same strike price. Anytime I see where I can make a really good payout by keeping the same strike, I'll go look and see how much could I make if I lowered my strike. What if I can lower this strike down to say 71? Well, I still get paid money, and if I can, then that's what I would normally do, because by lowering the strike price, it gets me back out of the money again. So you can see by lowering it, so what I did, I changed it to 71. You can see now the next week, May 25th, shows the 71 strike. I'm still going to get paid $400 to roll this the next week, and I get to lower my strike to 71, which is below the current stock price. So that means that if the stock stays where it is now, next week, I will be able to get out of this trade for basically pennies. If next week it's below 71, then I will do the same thing again. I'll roll it, and if I can roll down to say 70, I'll do it. Now, if it would have cost me money to roll down to 71, I would not have done it. I would have just stuck with the 72 and made, you know, $700 or whatever that was, and then just wait for it to come up to 72. But I hold off doing it here because, again, I was hoping that the stock would rally. But later in the day, I ended up having to roll this trade. And then I think the last one I'll look at on here is Twitter. Or no, okay, this next one was Netflix. I was just looking to see, this was a trade that I had done a put credit spread on, and it's going to expire worthless, which is good for me because, again, I got paid a credit, so I want these to expire worthless. You can see these are trading for pennies. My strike was 315 and it's at 323, so I just let this go. It will expire and I get to keep my full credit. But what I normally do on Fridays, I'm clicking the little left arrow on all my positions to make sure I don't see a date of today's date, because May 18th is expiration, so I need to make sure any position I have that shows May 18th, I need to get this closed out or roll, because if I don't, I'm going to get assigned stock if I let it expire. Or if it's a position that's out of the money, I'll keep an eye on it. And in this case, this Netflix one, I could just let it expire worthless because it's a pretty good distance away. So I'll go through these on Friday just to make sure I don't have any positions that because there's times I'll forget that I like, oh man, I need to go roll this position because it still shows May 18th. So we come down to Twitter. And so you can see Twitter is currently at 32.58. My strike price is at 34. So I need to roll this because the stock is still below my strike. This is another one I've been rolling for a while now. Since March 16th, I've been rolling it. And again, I don't mind because I'm getting, look at all these credits I've received every time I roll this thing. I started out at 50 cents and I've gotten 10, 10, 6, 6, 12, 9, 32, 24. All these credits add up over time to where when it finally comes back up above 34, I should make pretty good money on it. So I scroll down the screen, I click Create Rolling Order, and you can see it's going to buy back this week of the 18th. It's going to sell the next week at the same strike price. I'm going to receive 23 cents or $215 to do this roll. I'm getting paid to roll, so it's great. So here's where I'm checking to see, could I still get paid if I lower the strike price? So I'm checking to see what happens if I lower the strike price to 33.5. So you can see it adjusts the screen to 33.5, but now it shows a negative number, which means I have to pay. So this would cost me $145 if I wanted to roll this down to the 33.50 strike. And again, I don't like to pay money when I roll, so I decided I would just stick with the 34. So I go change it back to 34. I get my 235 and I submit the order. So now the order's working. I think I wait a little while to see if it fills, and it doesn't, and I think I go in and adjust it a little bit. Yeah, so now I'm going back in. So I go back into the order. I'm lowering my price now. So now I'm going to lower it down to 24 cents to see if maybe that will take. I go back to submit the order, and it fills almost immediately. And so now you can see my Twitter role filled, my closing out Etsy filled, and closing out PayPal filled. And I think that's the last trade I show in the screenshot here. Let me double check. Oh, this was another one I was going to show. Las Vegas Sands, I put on earlier in the week. I think it was on Tuesday, right after the announcement came from the Supreme Court that sports betting was legalized in all states. And so I knew casino stocks were going to rally, and they did, to where you can see that in just 3 days, I'm already up $448 on this trade. I sold this for 85 cents. I could now buy this back for 21 cents. So I was looking at this, debating on, do I want to buy this back now or wait? Because I did this for next week, May 25th. So I was trying to decide of, do I want to hold this for another week just to make 21 cents or close it out and go ahead and take my profit of 448, which is what I ended up doing later in the day. But this was just me kind of looking at it to get a feel what it was currently trading for. And then I ended up just, I think I was trying to see about a roll as well, but no, I decided against it and just went back out of the trade. So that's it for the trades I made today. I actually made some more later in the day that I can show as well. So some of the questions I had, we'll look at the PayPal example that I closed out. I had someone ask me, why would I close out this trade instead of rolling it? Like, why wouldn't I roll this trade to the next week and get paid even more premium? Well, the reason for that is because if we look at PayPal, let me zoom out a little bit. The reason why I didn't want to stay in PayPal, because for me to roll that, I would be rolling it to a strike price at this level, and I'm just not comfortable staying in PayPal since it's had this big run up. I mean, it may continue running up. Its all-time high is around 86, but I just wasn't comfortable staying in PayPal at this level. So I decided to close out and move on to another trade instead of sticking with this trade. I'd rather find another trade, which is what I ended up doing. I ended up getting in Micron Technologies with the cash that I freed up from this PayPal trade because I felt more comfortable in that position. If we look at a chart, Micron had this pullback, and I think I ended up selling the 51 strike, I believe is what I got into. So I just felt better about being in Micron. I felt like Micron maybe had more room to run, and that was just something I would rather use that cash to get in Micron as opposed to staying in PayPal and risking PayPal taking another dip like it had. Plus, I've been rolling this trade for a couple months, and I'm tired of the position. I got in this trade back when it was trading around up in this level. I think I got in on March the 14th. So I got in here, and look at all these dips that I've had to deal with and wait for it to finally recover. So that's why I don't normally, the only time I would ever roll a position that I could close out for profit is because if the stock is still trading at a level that I feel comfortable staying in it. Otherwise, I'm going to close out the trade and move on to something better. I don't want to stick with it and risk having to keep rolling it again. Another question was about, deciding when do you stop rolling and just take a loss. At some point, if you've been rolling for a long period of time and the stock is not recovering, When do you decide to just call it quits and move on? And that's just something that you have to decide for yourself. I mean, with PayPal, I felt confident it was going to eventually recover. I even remember talking to another trader in the Facebook group when PayPal was trading right around this level. I think it was around 74. And they were saying that PayPal looked bullish to them. And I said that I think PayPal will be above 80 within 2 months. And I was right. It was less than 2 months that it finally rallied back up to 80. I mean, this point was a little scary because it took a pretty big dip when that news came out on Amazon, lowering their prices on their payment service. But again, I knew that was just an overreaction and that it would recover, which is what it did. So, at any given point, though, I could have stopped rolling this, but by stopping, you take a loss. If I would have stopped rolling this, let's say at this level, when I got in up here, I would have lost several thousands of dollars. I would have lost, what's that come out to be? About $6,000 I would have lost if I were to have decided to start rolling. Actually, we can see in the screen, it was, if we go back to PayPal, it was the number we looked at earlier. This, when I rolled it, sorry, where is that? On May 4th. Yeah, this 685 number. I mean, that would have been my loss. If I would have decided to just call it quits, or sorry, 681. If I would have decided to just close this trade out and be done with it, that would have cost me, almost $7,000 of that I would have lost, minus whatever credits that I received as profit. So that's why I stuck with the trade. I didn't want to take that loss, and I felt comfortable that it would eventually recover. But now there are times where I will stop rolling if I feel like a stock is going to stay down for a long period of time or may not ever recover. And a good example is Macy's a couple years ago. I was selling puts on it, and let's see, it was back up at this level. So when Macy's was trading up in the 40s. This is back in end of 2016. I was selling puts on it, and they had a big dip. Retail was doing horribly back in this time frame, and Macy's took a drop, and I was rolling all during this time frame. I was rolling all through early 2017. I think all through this sideways movement, I was still rolling, still getting credit, to roll. And after sticking with this stock for 3 or 4 months, I finally just decided to give up. Luckily, I gave up before there was this huge drop here. So I gave up on this trade and took an overall loss by doing so. Not as bad as it could have been, since I at least received some credits from rolling. So there are times that I will just, call it quits and give up and take a loss. And I'm glad I did on this trade, because if you look at how Macy's has performed since then, I mean, you can see it's just now back up into the mid-30s. Back up to the level it was at when I decided to call it quits. It still hasn't reached back up to the level I was at when I first got in. So I would have been rolling this for over a year if I had decided to stick with it. So it just made more sense to me. Take the loss, free up that cash that I had tied up with Macy's, and use it for a different trade that I can collect the premium to offset the losses I'm making from selling this. Another question was about how to manually roll a trade, because some brokers don't give you the ability to, they don't give you the nice little button that you can click roll. Like if we go back and look at the Twitter, they don't give you the roll option where it gives you the opportunity to close one leg and open a new leg simultaneously. The main benefit of doing this is because it reduces slippage. And what I mean by slippage is you can actually execute these trades separately. I could go in and execute one trade to say buy back the May 18th option, and then I can go execute a separate trade to sell the May 25th. But what slippage refers to is, and I have it in Excel here for the Twitter roll that I did, These were the exact numbers for my Twitter roll. So when I rolled Twitter, I was buying to close the May 18th expiration, and it was going to cost me $1.40 to close it, which was $1,400. But then it was also doing a sell to open for the next week. I'm going to get paid $1.60. So I'm going to receive $1,600. My net credit now is $200. So the fact that they're executing this as one trade, I'm going to collect $200. But let's say I executed this as two separate trades. Well, I would then go buy to close out my trade. Regardless of what broker you use, you would just go in and close out your trade. You're buying it back to get out. So you would close this out, and you'd have to spend $1,400 to do it. So that's another downside to doing it separately or doing it manually, is that you need the $1,400 in your account to be able to close this out. Even though you're going to immediately recoup that when you sell the May 25th, your broker doesn't know that's your intention. So they're going to require you to have the $1,400 in your account to cover buying this back. Whereas my broker knows my intention because I'm doing this in one trade. They know that I'm buying this and then selling this, and I'm going to have a net $200. So they don't require me to have the $1,400 in my account to execute this roll as one trade. But if I were to do this separately and buy this back, I would need the $1,400 to do that. Well, now, it's going to take me a few minutes after I put this trade in to then turn around and go execute my next trade. Right? Like if I was doing this on the desktop app, and let's say my order was closed out, now I've got to go put on the new trade. I've got to type in PayPal symbol, or in this case it was Twitter. Type in Twitter symbol. I got to go find which expiration I want to do, May 25th. I got to scroll down and find the strike price that I want to sell. So while I'm doing all this, it's taking me several minutes to go find the new trade. Twitter stock could move during that time period, and it could move to where it makes this option here lose some value. This option is currently at $1.60, but if Twitter goes up in price, this option may drop to, say, $1.30. Well, by the time I finally get that order entered and executed, I'm going to be down $100. Because it cost me $1.40, but I only got paid $1.30 when I finally got this other trade entered. So I'm going to lose $100. That's what slippage is. Slippage is essentially, the delay in you getting the next order placed, to where if the stock moves against you, you could actually lose some money. Whereas if you do it as one transaction, that reduces the slippage, because you know that this is going to all be executed at one time. And there's not going to be a delay between the buying of this one and the selling of this one. So that's the drawbacks to doing it manually, but sometimes you have to, because your broker may not give you the choice to roll. So you can still do this strategy of rolling. It just means that in your platform, you'd have to go close out your trade and have to have the cash to buy it back, and then you would go into your order screen again, find the new trade you wanted to do. In this case, at the 34th strike, you would click the bid, and it would bring up your order window to then go place the order to sell the following week's option. So that's how you would do manual rolls. So going back to look at PayPal real quick, the one that I closed out earlier, I just want to show you again. So I got into this trade back on March the 14th. My initial credit was 87 cents, but because PayPal dropped, I had to keep rolling this. And you can see all the credits that I received throughout. There were certain times I got assigned the stock early, so I had to sell the stock, get myself back into the trade. There were situations where I rolled the strike down, so I dropped it from 82 to 81, and I still received a credit by doing that. So it's kind of a pain to figure out how much did I really make by doing all this without having to go through and add up all these credits. But the nice thing in Thinkorswim's desktop app you can put in a date range. So you see up top I have this date range of 3/14 to 5/18. This date range represents the entire duration for this trade. And then if I go down to the profit and loss section, it will list all the stocks that you currently have traded, and it shows you the profit and loss year to date. And this profit and loss diff is what the profit and loss is for the time period you specified up in the top here. So if we look at PayPal, which is the fifth one down, you can see that year to date I've made $3,700 on them, but for this date range I've made $1,800. So that's my total profit after all the credits I've seen from rolling, my initial credit, and the cost of me buying this back. I ended up making $1,800 on this trade by sticking with it, versus if I'd have just stopped rolling, I could have lost several thousands of dollars by doing so. So that's why rolling is what I do to keep myself in the trade, waiting for the stock to come back up. And as I mentioned, I got out of it because I thought PayPal had run up too much and decided to get in a different trade, and I ended up getting into Micron Technologies. Micron has done really well for me this year. You can see I've made $7,800 this year just on Micron Technologies alone. So I decided to use that cash that I freed up from PayPal to go get in Micron. If we scroll down, you can see here's the trade I put on today. I got paid a 70-cent credit at the 51 strike, and Micron's at 53.39. So as long as it's above 51 next week, I'm going to get to keep I did 10 contracts total, so I'm going to get to keep the $700 that I got paid if it's above 51, and if not, again, I'll keep rolling it. So hopefully that answers all the questions and gives you a sense of what I'm looking for when I'm putting on new trades. When I close out a trade, I kind of start shopping my watch list to find a good trade to replace the trade I closed out with, or I may stay with that same stock if it's the best choice to stick with. If I feel like, if PayPal would have been at a price level that I was comfortable with, I may have stuck with PayPal and just sold a new put for that stock for the next week. But I'm always, closing out positions, rolling positions that I want to maintain and wait for them to recover. And then I add new positions to try to keep myself always with 10 positions at a time. Let me know if you have any questions.